Hello everybody, Randy Patrick here with Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Bubble Turns. So here we go, lots to talk about, but we're going to take a little different shift today. Today is March the 13th. Yes, I realized when I looked at the calendar that I haven't put a video out for almost 2 weeks. I apologize. Lots on the go, but I also didn't feel there was enough real good news out there. I like to comment on news that I think is relevant or timely, and a lot of it just wasn't happening the past couple of weeks. So anyway, something to talk about today, which I think is very interesting. So we're going to look at the reasons why we have an inventory shortage going on right now. And I guess you could say that's kind of the number one issue with respect to the housing market. It's why we've had all of our problems for the past couple of years, because a lack of housing inventory. And we're going to go into the reasons why we have that right now. Okay, so obviously, the inventory shortage affects the overall housing market, which is understandable. We all know it causes prices to rise, usually at higher rates than we're used to, than normal, than we've seen over the past couple of years. Now, we had our value peak back in mid-year of 2018, probably spring to summer right there of 2016. The value peak as per Case-Shiller Home Price Index was about 11.6% greater than the previous housing peak, which was back in 2006 before the last housing bubble, bust, crisis, etc. So that's where we were. Now, so we've gained a lot since then. Now, low inventory causes price wars, right? It causes multiple offers. It causes bidding wars, and as a result, sales prices are pushed upward. People are raising prices because they want to run the market up, and sellers are happy to do that. Buyers will put in higher than list price offers to ensure they get the property. Days on market are low, becomes very competitive. People get very upset and frustrated. All right, buyers for the past year have stated they have a lot of stress in this process. As a matter of fact, some of the surveys came back saying the most stressful event, home buyer, people have said in their lives, have been buying a home over the past couple of years. So it really has taken a toll on a lot of Americans and other people across the country here. And we're now in a situation where we have what's called buyer fatigue. People are tired of playing the games. They're not going to offer full price list price anymore. They're going to wait. They're going to see what happens. They're going to negotiate and put in lower offers and wait the sellers out, because that's what they want to do. That's the situation we're in right now. Now, we still see year over year annual price increases, and the reason we see that is because the inventory that is being sold over the past couple of months ultimately is stuff that was put out earlier, in the fall, etc. So we're seeing sort of those closings take place now. Eventually, we'll see more of the inventory hitting the marketplace. All right. Which is great. Now, and also, we're seeing signs that metros are slowing down. So price appreciation has slowed and has plateaued, and even some locations have actually been losing value. So as every month goes, we're going to see how that kind of cases out here. Now, here's the reasons why we have the inventory shortage. So I'll go into them now. Let's talk about the first reason, which is kind of obvious. It's the lack of the new homes being built. So new home construction, new home production. We got a problem with that right now. So builders have pulled back all their efforts, of course, in building homes, and they told us they would do so at the end of the year, because when they do their third quarter, fourth quarter numbers, etc., and they do 2019 projections, they were predicting less home buying, higher cost structure, higher interest rates. So therefore, we're not going to build as many homes, and we're going to control ourselves in that capacity. And our friend is here, and let me tell you, she has been a very naughty kitty today. I'll tell you that right now. She's wrecked a lot of papers on our desks and stuff like that. So that's a scoop. All right, so let's get out of here. So anyway, obviously we know that builders have land and entitlement costs have increased in their process. Material costs have increased dramatically the past couple of years. Also, skilled labor has increased. There's a lack of skilled labor, and there's costly labor. So it's caused them to raise their prices as well too. But the issue is that they're not building in the affordable housing sector. and that demographic. And that's the area that needs the inventory the most. That's where we're lacking right now. So builders are building at higher price points, and they need to do so in order to earn the income, to get better margins and actually put profit. Again, a lot of these builders are publicly traded companies. They're not charities. They actually have to turn a profit, pay people, pay for the services and materials, etc. So they actually have to make money. So we're kind of in a situation here where we need this sector to increase their capacity, and they're not doing so, or they can't, or they won't, for whatever reasons that are out there that we've just said. So, and realize that new homes cost more than resale homes. So what you're doing though is you compare a new home, new home prices in market A are going to be more expensive than resale homes in market A, and the reason being, well, obviously new homes are charging a premium because you're buying a new home. An existing home you can walk into, there may be deferred maintenance or things you're going to take care of over next couple of years as you live in there. You're going to have to make improvements, do repairs, etc. New homes, you've got a good 10 years minimum before anything has to happen with that. So that's the difference between the two. That's why they cost more. And what I don't see, and what I don't think what's going to happen, is we won't see builders doing much more in the affordable housing sector for quite some time. Now, I recall, reading D.R. Horton saying they may do that in the future, but again, it's all based on the starting point. How much is your land cost? How much is your materials going to cost? So, to do an affordable housing development, they're going to have to really sharpen their pencils and buy accordingly, and that may not be in every area. There may be affordable housing in certain segments of the country where land is cheaper, materials are cheaper to get. A lot of locations that need it may not be able to serve the affordable housing sector. So that's one of the reasons why we're having inventory shortages, because the people who need to buy the homes, that want to buy the homes, can't afford to buy the homes that are available, or are not going to pay the premium for them, and they just can't make it work. So that's the situation we're in right now. So builders are one of the issues. Now, another reason, which I read recently, is called people that are aging in place. And what that really means is that a lot of people, like senior citizens, are holding on to their properties longer than they did before, historically here. Now, Freddie Mac released a study that showed us about that about 1.65 million homes, that's their estimates, were held back from the market for this past year in 2018 because of this phenomenon. And I'll post a link to that report as well on the About Us page there for the video. But seniors are living longer, they are in better health, they have access to much more services, are better educated, there's more conveniences nowadays, and this results in a delay in moving to nursing homes or retirement homes. So they're actually holding on to their properties much longer. And the study that Freddie Mac did suggests that the problem is only going to get worse as time goes on, and there's going to be a need for more housing production to accommodate the long-term housing demand this is going to cause in the marketplace. So this seems to make sense. We're living longer. If you go back 25 years ago, the average life expectancy was X. I know it's greater than that now. So that's actually happening. With respect to, you can talk to your doctor on Skype, and they can do analysis, instead of you having to come into the doctor's office. Services are more readily available. You have, Meals on Wheels. You have grocery services that'll drop it off at your house. You've got, a lot of things that seniors can have access to that can improve their quality of life with products and services that will give them a better quality of life, and I guess consequently cause them to live longer, which is fine. We all want to live as long as we can. So that's very interesting to see how that's playing out. So again, Freddie Mac, their estimates are 1.65 million homes did not hit the market because of this phenomena. Now, it's interesting, and they think it's going to keep increasing. Now, however, there are economists that suggest that this will not be a future problem, because as people age in their homes longer and longer, that tends to balloon, and at some point in time, the next couple of years, when they decide to move to a retirement facility, they're going to sort of do it en masse, and the expectation is now those homes will flood the market, causing a lot more inventory, and therefore prices should come down because of that. That's something we'll have to wait and see. But again, if you look at the charts and statistics, people will eventually go into nursing homes or retirement facilities, and the longer they wait, they're sort of bundling, and it's almost like the faucet. They're behind the faucet. When it opens up, it's all going to come shooting through. So that may be something to look forward to in the future. So so the seniors are affecting the housing market. We also have to look at the baby boomer generation as another reason why we have low inventory. And there's been a lot of talk about this for the past really 4 years. I was looking, on the internet today and about articles on this, and I saw stuff as back in 2013-14 stating, boomers are not selling. And, these are the generation that bought the McMansions, that have the nice, beautiful homes, etc. A lot of their purchases fueled the past couple of housing booms in the 80s, 90s, and then actually in the early 2000s. So they fueled a lot of the housing booms that have occurred. They're also holding on to inventory as they cannot, or maybe they don't want to, trade down. And the reason why you don't want to trade down is because you'd actually have to pay a premium to trade down now. So that's an issue. So and also if they need to take a mortgage, then they have to pay mortgage at rates that are maybe higher than they purchased maybe 10 or 15 years ago. So things have kind of changed a bit now. So they're holding onto their properties longer. Many of them planned on using the home equity to help fund the retirement, so they're kind of in limbo now. If they cash out now, and they want to move down to an affordable home, they can't find them, number one, or if they do, they're paying a premium for them, and it's not what they want. They don't want to do that at this point in time. A lot of them also have, as we mentioned many times before, many of them have adult children still living with them who either cannot buy on their own or will not buy on their own. They may be left, they've come back as well too. So this situation has prevented the baby boomers from selling their homes as well too. Now I've got my adult kids living with me. They can't afford a home, or again, maybe they don't want the same things the boomer generation had. So now we're kind of stuck. So now we have to house our adult children in their 30s, and we can't sell our home right now because we need the space. So it's kind of interesting how this all kind of plays in. But again, the boomer generation, there's inventory there that's not hitting the market that is desperately needed. Now, I guess you could say that now a survey, when I listed all these articles, surveys were done a couple years ago, and the majority of baby boomers did not plan on selling their home anytime soon, and that demographic does tend to have a high rate of home ownership. A survey that I saw was done in the fall of 2017 stated that 85% of the boomers were not ready to sell, and that ownership rate was 78%, which is pretty high. The average ownership rate now is around 64% across the board. So the boomer generation ownership rates, in the high 70s, which is considerably more than the average, which is interesting. So my assumption would be that thought process probably hasn't changed much over the past couple of years. They're probably holding on to their homes longer still. What may happen in the future, I don't know. Maybe they may feel compelled to sell if prices drop. We'll have to see what happens in the future. But again, that's one of the reasons why that there's not enough inventory, because the people who are changing residences and changing lifestyles, they're not doing so at this point in time. Okay, which brings me to my final point of, I guess you could say, this inventory issue with Miss Bubble Kitty here. And again, it's something called the shadow inventory. Now, you may have heard about this, you may not. So it's not always, I guess, something we talk about. Shadow inventory, I'll give you a definition. It can be defined as properties that are either in the foreclosure process or have been foreclosed upon, but they're not available to us or on the market as of yet. So they're really, they're in the process, or they've been taken back by the lenders, and they're not available to the public, which is an issue here. And back in the last housing crisis, there was a ton of them, because obviously when 10 million people had foreclosure filings, we had a lot of this inventory that came back on the market, and a lot of that inventory has dried up. It's gone. It's been sold, taken away, etc. And there's not much of it left. And why is that? Well, there's less foreclosures that are being filed, so we know that over the past couple of years, like since 2012 and 13, there's less that are being filed. However, the pace is picking up. So some of my videos that we talked about last week, the foreclosure filings are coming back on, especially in various parts of the country. All right, now the mortgage delinquency rate is still about 4%, but again, less homes are actually going to make it out of the foreclosure sale than there was during the last housing crisis. Now, they don't really make it to market, and here's kind of the reasons why. And I got to move this cat because she's on my stuff here. Okay, off you go. All right, so Less stuff is actually, and she's giving me the evil eye now. There's a reason why they're not making it to market, and that's called investors, okay? Mainly institutional or large investors. These are groups that are purchasing the shadow inventory homes at the foreclosure auction. So home goes all the way to auction. What happens? You got people with a lot of money who are buying these homes at the auction en masse. Now, these auctions, the majority of them in major metro locations across the country are online auctions. So there's no more, hey, let's go to the courthouse steps and we'll bid against the guy over here and see if we can get the property. That doesn't work anymore. Very few locations probably have that going on. Most stuff is automated now just because of the previous volume. There's need to do so and the speed and the ease. So you have a lot of, less mom and pop investors are doing the foreclosure auction stuff. All right. So it's being done en masse by institutional investors. So therefore it's easier for them to buy. So these homes will never make it back to the lender. And what I mean by that is because they're being purchased at the auction, they're never going to get back to the lender's inventory to come back out and be on market for us. So that's part of the issue as to why we don't have more properties in the market that we can actually purchase. Simple as that. Or the lenders themselves are also auctioning off these homes through their own auction portal. So there are lenders and servicing companies that will take back. So once they take back their foreclosed, if they're not purchased at the county or city auction, then they're taken back into their own inventory and they put them out to the market based on their own, we'll call it auction portals or online services. So again, what's happening there is other investors are going to jump on those and they're going to auction them, purchase them via the lender's auction. And why this is an issue, because John Q or Jane Public is not really going to buy their dream home via an auction site. And again, retail buyers don't do that. It's just not in their thought process, and nor should they, because the homes could be distressed, they could need repairs. There's a risk element involved here too. So the majority of retail buyers are not going to purchase at an online county foreclosure auction or at an auction site owned by a company, a servicing company, or another lender. Just not going to happen. So what happens? Those homes don't hit the market. They're purchased by investors, whether they're institutional investors, smaller investors, mom and pop investors. Well, they don't hit the market, which means there's less of those available to us as in the public here. So, and one thing I also want to mention here too is that I'm talking about homes that are coming back on via the auction process. Well, a lot of these homes that are taken back by the lenders via the first phase of the foreclosure process, a lot of them don't even make it to these portals and things like that. And the reason being because larger lenders tend to sell these non-performing loans or assets in bulk to other institutional investors, hedge funds, large investors, etc. Every so often, if you follow the news, you'll hear that, Fannie Mae or Freddie Mac just sold $1.4 billion worth of non-performing assets to a couple of hedge funds. All right. Well, what do the hedge funds do when they buy these assets? Well, they don't put them back out in the market for sale. Their goal is to deal with them and eventually fix them or put renters in there and work their own model. So a lot of these homes that have been taken back by the lenders are going to be transferred, in big deals to other larger investors, and we're never going to see them on market at the local level on the MLS essentially. So the lenders want to get rid of the debt and cover the loss. So for them, they go, hey, I can do a one-off deal and sell it via the MLS as a real estate owned REO, or I could sell 1,000 of them in one fell swoop for $1 billion to the hedge fund. So they're going to take the path of least resistance. They're going to go that way, which is understandable. But what that basically means is that that inventory is not hitting the marketplace. So hedge funds are grabbing that stuff. So they are either fixing it up and selling it for a premium, or they're putting renters in there, which means we as buyers never get access to those properties. So that's a reason why we're not seeing more inventory. Now that's all I guess you could say it's got to work with the amount of foreclosures that are happening as well too. So there's less foreclosures, there's less of that going on. But I can tell you, especially in where I live here, that 2015 to 16, more foreclosures were on. 16 to 17, more foreclosures. 17 to 18, more foreclosures. Okay, so I know that for the past 3 years, the trend has been going like this. So more foreclosures are being filed. That means more of these homes will be going back to the lender or to these hedge funds via the auction process or non-performing loan process. So that's just what happens. So we never get to see it. There's going to be some REO listings out there, but from my experience, it's a small percentage of the market, and the homes that are out there are typically horrible. They make the homes available to say first-time home buyers, etc. Most of them they're overpriced, and they're horrible. No first-time home buyer is going to engage in a nasty project that doesn't make sense. And realize when you take a look at the overall market, so according to Realtor.com and the National Association of Realtors, if you take a look at all the sales for 2018, only 2% of all the sales were distressed property sales. And if you break that down, that is short sales, that is REO sales. Okay, so real estate owned, which is lenders putting their foreclosed property back onto the marketplace. So only 2%. Is distressed. Now if we break that down further, let's assume 1% are short sales, 1% are REO. So therefore, there's not a heck of a lot coming on back to the marketplace as an REO, real estate owned by the lender. So very little distressed properties available to the public. Obviously, that impacts the overall marketplace here. Wall Street and hedge funds, they're grabbing these homes up. We're never going to see them. The retail public will never have access to them. And I also think this affects home values because back in the last housing crisis, a lot of these homes did go back on the market. They were cheaper. They were discounted. People were buying them. Yeah, there were mom-and-pop investors, small investors buying them, but there were also retail people, real buyers who wanted to be owner-occupants purchasing them as well too. So those homes became sales comparables, and they were at lower prices than non-distressed properties. So it helped keep some of the property values in check at the time. Well, the lack of those in the marketplace now means there's not discounted properties dragging down the value. So if you think about this, and I'll talk about this in a future video, but we'll connect the dots to what's going on here, and you'll find it's very interesting as to what's really happening in our market and how it's being controlled. So I want to make sure that you understand that. Now, I talked about the REO as being half of the shadow inventory. The other half of the market is the short sale market, or which really before the short sale is the pre-foreclosure market. So these are people who aren't paying their mortgage. They're in the foreclosure process, but they have not been foreclosed on yet. So they still own their home, they're still in the home, they still have title to the home, but it hasn't been formally foreclosed and taken back by the lender or sold to somebody else at the auction. All right, so that's the other half of the shadow inventory. Now this market is totally ignored by real estate agents and real estate investors alike, and it's just the nature of the business. But it's what I focus on, and I think that is really an opportunity for everybody here, and that's why you hear me talk about it. And when people actually email me and say, what should I do, where should I look for a home, I always say go to the distressed property market first, because that's where you're going to find the better deals and the better prices. So that's exactly what I do. So the thing is that you don't buy them from the lender, you buy these from the homeowner, because the homeowner still owns the property, but the homeowner needs the approval of their lender for the sales price at which it's going to be sold at. So that's the difference. So we're actually contracting with the homeowner to purchase a property. Our offer has to be reviewed and accepted by third-party approval, which is their lender, in order for us to close. That's the scoop here. But you can purchase these homes for discounts, and as a matter of fact, I look at the stats all the time. So in my state, which is Florida, the most recent data available is January of this year, so January 2019. I took a look at all the transactions that occurred in the state and the median price point, and I took a look at all the short sale transactions that occurred in the state and the median price point there. And there was about a $50,000 difference between the retail price point median and the short sale price point median. All right. Now, obviously, the retail sales are a large number, and the short sales roughly made up 1% of that overall market. So again, it's not much, but the point is, statistically, you can see that there are discounts to be had if you're purchasing a distressed property or a financially distressed property in this situation here. So again, these transactions make up about 1% of the marketplace, but we know that there's more foreclosure filings that have happened over the past couple of years. We know that they're picking the pace up now. We know that other locations across the country are increasing in their foreclosure filings. We also know that there'll be more to come as time goes on. So as people buying at the peak with low money down and being cash strapped with high debt to income ratios, that we're going to see some more of this in the future. And if prices do fall 5 or 10%, more people will be underwater as well in their home. So I think this is where you can get the inventory that's not available right now. But again, in summary, we have lack of home building because not cost effective to do so, and it's hitting the affordable housing sector, which is demographic that needs it most. We have senior citizens who are we call aging in place, which is responsible for almost 1.6 million units that should have hit the market this year, didn't. That would have helped a lot of people, purchase homes, etc. We have the baby boomers who have gone on record saying they're not going to sell, they're not ready to sell, and they have their own issues and constraints preventing them from selling, which makes sense. And then we have the shadow inventory or lack thereof. So, back in the day when we were in the trough after the housing crisis, all that inventory was coming on market, which means, people were buying it cheaper. Retail buyer was cheaper. Hedge funds were buying them cheaper. Mom and pop investors were buying it cheaper. Well, that's all gone now, and it's coming. So prices rose. So, but there's still more of this shadow inventory behind the scenes that is not making it to the marketplace. And that's causing some problems and causing some of the reasons why prices are still high and we still have low inventory. So how do we get around that? Well, work in the short sale arena. Go after properties in pre-foreclosure, and it takes a little bit more work. But for me, $50,000 on average, I'd rather have that in my pocket than give it to somebody else. That's how I look at things. So that's the scoop, okay? So again, the market is totally underserved for the pre-foreclosure market. It's been my focus. It is my entire focus moving forward, and I think there's a lot of interesting things that we can do with this marketplace. There will be a lot more videos coming out from me on this topic as we move forward over the next couple of months. So I want to make sure you understand that. And there she is for our closing. So once again, appreciate the views, appreciate the likes in the video, and of course appreciate your comments. And please subscribe if you like what you've heard. I'm going to start to do some more pointed discussions, not necessarily always revolving on market percentages in different locations. Of course, I'll keep doing that, but I'm going to start doing things like this that are really getting to the root cause and maybe some solutions of where the housing market has come from and where it's going. So again, please contact me if you'd like to learn more of this in the future. And you can find my email in the main section of the video. So again, appreciate the time, and we'll look forward to speaking with everybody shortly. Thank you.